Hello traders, welcome to my channel. This is Dion. If you are new to this channel, please consider subscribing and join the free Telegram channel where I post some trading tips and some signals sometimes. Okay, so in this video, I'm talking about the analysis time frame and the scalping time frame. These are two time frames that are very important but should be looked at in a slightly different angle if you are really trying to be profitable. All right. So when I'm talking about the analysis time frame, I mean that time frame where you are mapping your structure to know the direction of the market. On the analysis time frame, this is where we find the POI. The POI is a point of interest. Okay, something like an order block or a fair value gap. On the analysis time frame, when we are talking about entries, when you enter a trade somewhere here, okay, let's see. If you entered somewhere here, too long. If you entered a trade somewhere here, you're expecting the market to go all the way to the break of structure. Okay, that is the analysis time frame. If you entered somewhere here, if there's an order block or a fair value gap or anything that you use as a POI, you're expecting the market to go all the way up to break structure to the upside, meaning the market in this case, you are seeing the market as going to the upside. All right. You are not trying to take profit somewhere here. Maybe if you're a smart trader, like a really smart trader, you can be taking partials here. But the original take profit is going to be all the way up there. Now, when we are talking about scalping, you don't look at the market the same way you look at the analysis time frame. It's a bit different. With scalping, you are looking at the market in liquidity form. When I say liquidity, I'm talking about those zones that are too obvious, okay? That are way too obvious, where it seems obvious for a trader to take a trade. Okay, the areas that I'm talking about are, some trend lines or double tops or double bottoms. Those are some of the areas that I can say these are liquidity spots. Even inducement, that's a liquidity spot. All right, so here the market already took out inducement here and then it bounced, went to the upside. That is on the analysis time frame. Now, when you are scalping, you don't necessarily have to wait for the market to go to your analysis point of interest for you to enter a trade or scalp. No, even in the counter trend, you can still enter a trade and be profitable. Actually, I do that on a daily basis. So when you're scalping, you have to pay attention to levels that form like this. These patterns, like the double tops or double bottoms, are liquidity spots. There are a lot of stop losses that just lie above there. Okay, because the idea is that there are still people that think when the market makes this double top, it means there are a lot of sellers that are trying to push the market down. Meaning, if you already have double tops there, then the next pump there is also going to go, it's just going to tap that resistance level and then go to the downside. So let's say, for instance, if there was a sale here, if someone sold here, okay, if someone was trying to sell on that resistance level there, the market moves objectively. Okay, there's a reason it moves in a certain pattern. Okay, when you see double tops like this is liquidity just building up. It induces a lot of traders to sell here. So when you enter a trade here, you are expecting the market to drop and then maybe go all the way to the downside there, and then it just moves aggressively to the upside, taking out all those stop losses. Now, even if you are looking at this as an SMC trader, when you're looking at it on the analysis time frame, for you, you are expecting the market to go to the upside. All right. Now that is easy. That is very easy. Now, when you are scalping, this is where you notice a lot of patterns that are way too uniform. If I ask you right now, what can you notice here that can trigger you to enter very accurate scalping entries? Here, one thing that I've noticed is this trend line right here. Okay, this trend line right here. The market makes a lot of trend lines because there are a lot of trend line traders. Okay, like that. So this trend line has to be violated at a certain point. All right. Now it got violated here. Imagine on your analysis time frame, this is an uptrend, but then there's a scalper like me who is looking at this market in liquidity form. For me, if I enter, let's say there was in the daily bias or whatever bias is saying that it's bearish, and then you enter somewhere there. In this case, I'm seeing a lot of stop losses down here. First of all, there's also these double bottoms here, meaning there are traders that are trying to buy on this level here, where there are double bottoms. And then there's also this liquidity, right? This trend line liquidity. This means if I enter there, I'm way more confident that the market is going to take out this. The liquidity acts like a magnet. It's like it's pulling price to the downside. Okay, the market doesn't just move because no, it's random. There's nothing random in the market. Okay, so again, when you look at it very clearly, I don't want to have a lot of lines here, so I want you to. This is how you're supposed to be looking at the market. Here, as a scalper, if you are trying to enter somewhere in this range, let's say maybe you're already in the London session, and then on the analysis time frame, this is what the analysis time frame is for. Already, at least you know the market direction. Okay, but you've also noticed something here, a pattern. Okay, this is a trend line pattern. All right, now in this case you can already see that the market has taken out inducement here. Now this inducement, this correction leg right here made a perfect trend line zone. This trend line zone, this is a perfect entry for you as a scalper, because now you have an area where you want to target. So on the lower time, this is a 15 minutes. Now on the lower time frames, if there's a buy setup somewhere here, maybe there's a single candle order block, maybe there's some sort of inducement on the lower time frames, you just need to have some sort of an entry setup. You don't just take a trade if there's no entry setup. No. Okay. It doesn't matter how much you know about liquidity. You still need an entry setup. So if you entered here, this can be your target, this trend line right here. You don't need the market to go all the way and then break structure there. Okay. Now, if you look closely again, the market made a double top there. So if this was like the London session, okay, after manipulating that, violating that trend line liquidity, and then makes double tops above there, already you have the analysis time frame with you. You already know where the market is supposed to go. Now there's that double top. This on your scalping time frame, this is jackpot for you. Okay, because now there's way too much money. There are way too many stop losses that are just lying above there. So if you entered somewhere here, this can be your target. Okay. Now, again, when you look, the market left liquidity. When the market leaves liquidity like this, it doesn't take a lot of time for it to come back for it and then just take it out. All right. Now, in this case, if you were trying to enter a counter trade, because if you are trying to sell here, it means you are going against the trend. You are going against the analysis time frame. So if I sell here, this can be my target. All right. But in my mind, I don't necessarily have to know that the market is going to change character. No. But I can have, if you close some of the trades here, you can maybe have just like two trades still running and then expecting the market to hit down there. Okay. So when you're looking at the analysis and the scalping time frame, you need to differentiate the two. There's no need of you waiting for on the on the scalping time frame, waiting for the break of structure, the change of character. Of course, even on the lower time frames, there's a market structure mapping. But look at it more in terms of liquidity. Where are those stop losses lying? They are so obvious. If you see a certain pattern repeating almost every day, pay attention to that and go against it. All right. Yeah, that is all right. Now, looking at the real chart, this is the British pound US dollar. You don't even have to go that far back for you to notice certain patterns. All right. So when you join the free Telegram channel, I post some of the signals come from this. All right. Sometimes it's the signal, and then sometimes it's just analysis. So there are certain screenshots where you see inline liquidity being labeled because that's one of the most obvious liquidity patterns that you can notice in the market. Okay, right here. So this was marked. You can already see where it's coming from. It's very, 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 very obvious. Okay. The market doesn't just make these patterns because it wants to look good. It wants to look, uh, no. These patterns are made for a purpose. They are supposed to be violated at the end of the day because there are traders that are expecting them to work all the time. All right. So yeah, we can look for another one here. You don't have to go very far here. Yeah, when you mark it like this, yeah, this looks like it was also a good one. Okay, they match very perfectly. Okay, just like that. Okay. So let me show you how some traders even lost money just here. Just here. So you can already see that the market is going to the upside like that. All right. So in this case, you expect to buy somewhere here. Now, this is a perfect trend line liquidity right here. It's a perfect trend line liquidity formation right here. There's a break of this is why I say even SMC traders can be trapped. They can be liquidated. Imagine you have already marked a break of structure to the upside, meaning you are just trying to buy. Market has already taken out inducement here. You are just trying to buy, and then there's this move right here. There's this move right here. So this move was just trying to take out the trend line liquidity. You are not on the wrong side of the market when you are talking about direction. It's just that there's way too much liquidity down here. So you have to be very, very careful. If you see there's a trend line liquidity building up like this, and then you've already mapped your structure, break of structure is going to the upside, okay? The market will just come, take you out, okay, making even a change of character to the downside, indicating that the market has changed direction, when in actual sense, in the long run, it hasn't. Okay, it just comes down, reacts to that fair value gap, and then start going to the upside. It was not only taking out traders that bought here. No, there's also this trend line liquidity that formed very, very perfectly. Okay, so it's not like the market is just going against you, it's going against stops. It's not your broker trying to, like, they're just out there to get you. No, it's so obvious where a lot of traders are trying to take their trades. All right, so if you still haven't joined the Telegram channel, it's still open, and there's also a mentorship program that is, or is still running. Yeah, if you made it this far, thank you for watching. Until next time, happy trading.